Welcome back, Crypto Explorers. This week, June 15th to 21st, 2025, felt less like a market and more like a DeLorean ride through crypto history. From political bombshells to wild global stories, we're breaking down the week's biggest headlines, so buckle up and let's dive in. Donald Trump just made Bitcoin a central topic of discussion. His recent comments have sparked a wave of interest and speculation across the financial world. A national talking point, pushing it further into the mainstream conversation. Major news outlets are covering the story, and the implications are being debated by experts and everyday investors alike, suggesting it as a hedge, a potential safe haven for investors seeking to protect their wealth. This endorsement adds credibility to the argument that Bitcoin can serve as a valuable tool in uncertain economic times, against the Fed's $37 trillion debt. This comparison highlights the growing concerns about the stability of traditional financial systems and the potential for alternative assets like Bitcoin to offer a solution. This isn't just political theater, it's a sign of a fundamental shift in how we perceive the role of cryptocurrency in the global economy. Institutions are watching, carefully analyzing the potential impact of this development on their investment strategies and the broader market landscape. And the idea of the US holding Bitcoin is now mainstream, no longer relegated to the fringes of the financial world. It's a concept that's being seriously considered by policymakers and thought leaders. Whether Congress acts or stalls, the conversation has begun, and the momentum is building. The seed is planted. The idea of Bitcoin as a legitimate and valuable asset has taken root in the minds of many. Bitcoin as a strategic asset is no longer a fringe idea. It's a concept that's gaining traction among investors, analysts, and even government officials. The game has changed, and the rules are being rewritten. And the world is paying attention, eager to see how this unfolds and what it means for the future of finance. In Paris, a crypto investor was kidnapped and forced to hand over their hardware wallet. Proof that digital wealth brings real-world risks. Forget hacks. Physical threats are the ultimate vulnerability. The lesson? Stay low-key, protect your privacy, and remember, being your own bank means being your own security chief. The Paris incident is a wake-up call for everyone in crypto. Texas, the Lone Star State, known for its independent spirit and economic prowess, is on the verge of potentially making Bitcoin a state reserve asset. This bold move could signal a significant shift in how states view and interact with digital currencies, opening up new avenues for financial innovation. The proposed legislation, a bill that's already cleared the legislature after much debate and consideration, now awaits the governor's silent approval. The governor has the power to usher in a new era for Texas and its relationship with cryptocurrency. If it passes into law, Texas could very well set off a domino effect across the nation, potentially pushing other states to seriously consider and follow suit in adopting similar pro-Bitcoin policies. This move would not only legitimize Bitcoin at the state level within Texas, but also it has the potential to significantly reshape the U.S. crypto landscape, fostering greater acceptance and integration of digital assets into the mainstream economy. All eyes are now focused intently on the governor. The decision rests solely on their shoulders. History could be made quietly, with the stroke of a pen, forever changing Texas's financial future and potentially influencing the course of cryptocurrency adoption across the United States. Walmart and Amazon, two of the world's largest retailers, are making moves that could reshape the future of finance. Their potential entry into the cryptocurrency space is sending ripples throughout the industry. Reports suggest they are reportedly close to launching their own stablecoins. This isn't just another tech experiment, it's a strategic play that could redefine how we think about digital payments and commerce. The implications are massive, potentially onboarding millions of users into crypto overnight. Imagine the ease of using a stablecoin backed by these retail giants for everyday purchases. This could turn digital currencies, once seen as volatile and complex, from speculative assets primarily traded by investors into daily payment tools for billions of consumers worldwide. It's a shift from investment to utility. For established payment processors like PayPal and Visa, it's potentially an existential threat, a challenge to their dominance in the payment landscape. These retail giants could cut out the middlemen, bypassing traditional banking systems and payment networks altogether. They could control their own financial ecosystems, offering seamless and potentially cheaper payment options to their vast customer base. The stablecoin stampede is coming, driven by the power and reach of these retail behemoths. and it could trample the old guard, disrupting traditional financial institutions and ushering in a new era of digital commerce. The race is on to see who will lead this financial revolution. The Ripple versus SEC case is finally nearing its end, with the XRP community holding its breath for a decisive ruling. Meanwhile, Flare Network's new bridge brings XRP into DeFi, expanding its utility beyond payments. Despite the progress, XRP's price remains stuck, reflecting market uncertainty. The next few months will determine if XRP finally joins crypto's top tier. Congress has introduced the Genius Act, aiming to create clear crypto regulations and defend the dollar's dominance. The bill encourages private stablecoins and sets the stage for global crypto standards. If passed, it could end regulatory confusion and unleash a wave of US innovation. It's ambitious, but it's the most sensible crypto legislation yet. Globally, crypto adoption is accelerating. Spot Solana ETFs are gaining traction, Thailand is offering tax breaks, and Vietnam is legalizing crypto. In Latin America, oil reserves are being tokenized, making real-world assets tradable on-chain. These moves show Web3 is going global, with innovation happening on every continent. The pace of adoption is only speeding up. Bitcoin dipped this week, sparking correction fears, but on-chain data shows institutions are buying the dip. Retail panic contrasts with smart money accumulation, a classic setup for the next rally. Analysts see this as healthy consolidation, not the end of the bull run. The bull market may just be getting started. US authorities seized $7.7 million in crypto from a North Korean network running fake IT worker scams. These operatives infiltrated companies, funneled salaries home, and probed for vulnerabilities. The bust highlights both crypto's dark side and law enforcement's growing blockchain expertise. Even in a decentralized world, the trail can be traced. Ethereum's upcoming Fusaka upgrade promises to slash gas fees and boost scalability through data sharding. This will make Layer 2 solutions cheaper and transactions more accessible for everyone. If successful, Ethereum could reclaim its spot as the go-to platform for developers and users. It's a crucial step toward a truly global, scalable, decentralized internet. That's a wrap on a wild week. Bullish upgrades, global adoption, and real-world security drama. The main takeaway? HODL responsibly, protect your assets, and stay informed. We'll be back next week to break down the latest madness. Remember, this is not financial advice. Always do your own research. Thanks for watching, and see you in the next one.